Hi, my name is Bianca Pisciola. I'm the CEO of Six, and welcome to the Deep South Live Investor Summit. I'd like to start today by introducing our presenters, Pierre Levael and Paul Smith. To kick things off, Pierre will be telling the company story, and then we'll be accepting questions. You can submit your questions in the Q&A panel on the right-hand side of your screen. Now, without further ado, take it away, Pierre.
Thank you, Bianca. Welcome, everyone. What you're about to see is a pretty rare opportunity because it's not often you see a project of this magnitude in the exploration and development company. And that's where you have the best leverage to benefit from a project of this magnitude. We are an exploration and development mineral resource company, mainly involved in Namibia. So I'll show you where we are. So next, up to slide 3, please. We are developing the outstanding Haib Copper deposit. It's a large copper porphyry deposit. We just recently issued a PEA with outstanding economics. The project, the deposit hosts a very simple and clean mineralogy that makes that we can access some very low cost deep leaching and SX.V processing. And that turned out to be the reason for the robust economics. It's open pitable with a low strip ratio. It's open at depth and surface, so there's a substantial potential to increase the tonnage and significantly increase the grade. On top of that, we have identified 5 satellites targeted for future resource expansion. So you will see it's a tier 1 deposit that will, we will see eventually in the time that will become an extremely large deposit. It's an outstanding location. The accessibility to major infrastructure is all around the concession. And Namibia, as many of you may know, it's a tier 1 jurisdiction. It's a very highly friendly mining country. We have an highly experienced management team with a huge track record from discovery to building mines, operating tier 1 mine, mainly in Africa. So next slide, please. The Haib Copper Project is a tier 1 deposit, as I was saying, located in the down south Namibia, very near the South African border. When we acquired the project, it came with a significant work from the past, 66,000 meters of drilling. There was quite a lot of metallurgical work done. There was a feasibility study done. There was mapping and a lot of geological work done. And we got all the work, all the data, and we also have all the cores on site well preserved. So for us, it's a huge asset. The deposit contains a 4211 indicated and inferred resource, which is over 5 billion pounds of copper in the ground. As I said, the recent heap leach test work have showed recoveries up to 96%. And the preliminary economic assessment has shown very robust economics. It's very important to mention that we choose a base case using 80% recovery with a 20 million ton per annum and at $2.50 per pound of copper. But on today's date, we're at 290. So we can see that these economics have improved quite a lot since we have disclosed the PEA about 2 months ago. It's an after-tax NPV of 611 million, an after-tax IRR of 22.7%, and a capex of 341 million. So it's pretty low capex. Deep South at the moment trades at 1.2% of its NPV after tax, while our peers are trading 2.5 to 5% of their NPV after tax. So we're seriously undervalued, and there's good reason for that. But there's also a huge upside potential. Just briefly, that's our capital structure, 78 million shares in issue. Our largest shareholder is Teck, its management and directors together with 24%. Teck Resources at 23%. So the float is 53%. The team, I will not go over all the resume of everyone, just to say that we have over 140 years of combined experience in Africa, from discovery to mine management to mine construction. So we are the right team to develop a project like the one we're attacking now. That's the recent PEA numbers. And the center column is 20 million tons per annum, 80% recovery for a production of 35,000 tons per annum of copper cathodes and 51,000 tons per annum of copper sulfate. In the PEA, we also have models at 85% recovery, and we have also other, other throughputs. What is important also, as you can see, we have done a sensitivity analysis from $2 per pound of copper going up to $3 per pound of copper. So what you can see here is that the capex is 341 million, and the OPEX total cost of operation is 134 per pound of copper. It's not the lowest in the industry, but it's in the first quartile. It's pretty low. And we know that with more tests, we can most probably improve that again and have a better operating cost. At $2.50 per pound of copper, you see the numbers that I've mentioned before, and the strip ratio is 141:1, which is a pretty low strip ratio, which with more modeling, we think we can improve again. I point your attention on two things. In the column on the left of $2 per pound of copper, you can see that the IRR after tax is still 14%. It's pretty low, but what it shows is that even at $2 per pound of copper, it still makes money. There's some project in the world at the moment that under 250, under 275, they're not making money. So in that case here, because we can use low-cost operations, we have some very low IR. We have a very low operating cost, and what it makes is that we can give some very important returns. And you can see at $285 per pound of copper that the IRR suddenly jumps at 27.6% after tax, which is extremely robust. Now, when I was saying that we were strongly undervalued, we've done a very quick comparable with some companies that could compare. It's always difficult to compare companies because no projects are necessarily similar, but in general, these have some similarities to Deep South project. And what we can see here is that on the first line, we see that we're trading at 1.2% of NPV. And we can see that most of our peers are trading between 2.5 up to 13.5% of NPV. We've seen also that gold recently has gone up substantially, and you can see the valuation of gold project is very, very high. So we have, at the moment, a ratio that is extremely favorable compared to our peers because there's a lot of leeway there. There's a potential to, anyone that buy today at 10 cents or tomorrow at 20 cents will still have a huge potential for getting a good return on investment. So next slide, please. We will be at slide 8. That's just a quick presentation about the price of paid for copper M&A over time. In fact, it's the last 10 years up to 2018. And what we see there is that, in general, the project at the exploration stage were sold in average at $74 per ton or 3 cents per pound of copper. And Deep South is on a path to feasibility. And just given that, we can see that we have an upside potential of at least 3 times there when we reach our peers. So it's again, it's a pretty exciting future for the company because we have a very good upside potential. Now, this is the previous drilling that has been done. I will, sorry, it's next slide on slide 9. This is the a cross-section of that drilling. What you see there is a deposit and cross-section. All the drilling is from surface, so the resource that has been estimated is from surface down to 350 meters, where you see most of the drilling stops. You can see that some drilling is going way below, down to 800 meters, and it's still mineralized arriving there. So what we know is that we can open up the deposit in drilling below where we are, and it's also open-ended at surface. The other thing which is very important, and that's where we will see some very exciting future potential for the deposit. All the drilling you see there is in general vertical, and it's spaced by 150 meters. The reason why it's spaced by 150 meters is because most of the major companies that went on the project before were chasing tonnage. So in doing so, they were always extending the grid, and they were keeping it at 150 meters to identify more and more tonnage. They were aware that there were high-grade patches, but that was for later work, for later detailed work. In our case, when we looked at that, we decided to identify, because that has never been done before, to identify what is the structures that are controlling the high-grade pods. And we have found quite a lot of fault and shear zones that tend to be vertical. So when you drill vertical, spaced by 150 meters, guess what? You miss most of the high-grade material. So here what you see is that when we will drill, future drilling will be done in these high-grade pods, and it will be done in angle, not vertical, and it will be spaced by a tighter grid. That's the resource that we have. It's an indicated resource of 450 million tons at 0.31% copper. Just to note, what is very important is that the resource is that we have used in the PEA is an indicated resource. We didn't use the inferred resource. In the center of the deposit, there's a high-grade section that contains 140 million ton, and that will be the object of future work. And we see in that area many drill holes that have grades between very long extension that have grades between 0.50% and 1%. So that's the object of future drilling. And what you see there is these extension I was mentioning. It's 150 meter at 0.68% with 30 meter at 0.94%, and so on up to 1.26%. So what you can see there is that there's definitely high-grade sections and high-grade pods in that deposit, and they're way higher grade than the average at 0.31% of the indicated resource at the moment. So future plans are to infill drill that specific area in the center of the deposit, and this is the footprint that you see there. There's 3 pits in that area, and we will infill drill that area to first develop a measured resource over that area, and also at the same time get a definitive grade in that area, and that grade we know that will have an influence on the overall deposit. So in improving the grade, automatically we will improve the economics that we have in the PEA. So that's pretty exciting for the near future. One thing I would like to point to your attention is pit number 1. You see a line there with very tight spacing, and what you see when it's tighter spacing, you see that we hit more high-grade material, as when we look at a cross-section of the same pit, you can see that when the spacing is tighter, we hit quite a lot of high-grade material. And when we suddenly go to 150 meter spacing, there's less high-grade material. The other thing also is that when we drill an angle, and we see that from the adit, and we see that a bit below 350 meter, what we see there is that going an angle, we hit more high-grade. And the reason is very simple. Because the structure tends to be vertical, when you drill vertical, if you're not on the right spacing, you will miss them. But when you drill an angle, you will cross them. So then you will hit more high-grade material, and then you improve the grade of the deposit. So that's just a slide number 14. That's just a same view, same cross-section of the overall deposit, just to show where we will drill eventually in the same high-grade section. Next slide, please. Recently, we, let's say at the end of 2019 and early 2020, we have completed some bioassisted heap leaching that recovered up to 96% copper. That was run by Mintech of South Africa. And Mintech is a renowned specialists for bioassisted leaching in the world. And bioassisted leaching, by the way, is not a new technology. It's a robust technology that exists since over 40 years. It's mainly used by major companies in Chile. Codelco used bioassisted leaching on their Redemiro Tomich mine successfully since many years on the exact same mineralogy than what we have at Haib. You can see that the grade of the, when I was talking about the mineralogy, which is very simple, you can see that it's 98.5% chalcopyrite and a little bit of other stuff, but there's no deleterious material, there's no arsenic, there's no uranium, there's no borium, there's nothing that creates problem in the leaching. So that's one of the main reasons why bioassisted leaching works very well in that project. The ore also contains over 3% pyrite, which is very important because it's pyrite when it leaches self-generate sulfuric acid. So what it does, it lowers down our acid consumption well below 10 grams per ton, which is already at 10 grams per ton. It's very, very low. So for us, it helps reducing costs. And the material agglomerates very well. You will see a little bit later how it works. Briefly, we have also done some ore sorting tests with a company called Steinert. Steinert is a German company that is in operation with sorting material and sorting minerals since over 100 years. It's an X-ray sorting machine, so the material goes on the rock goes onto a rolling carpet. There's an X-ray that shoots over the carpet and then is analyzed on the at the bottom, and the material that contains chalcopyrite in good grade will, let's say, be derived on the left side, and the low grade material will go on the right side. So what it does, it improves the grade at the entrance of the leaching pad, and as you can see here, the grade has been upgraded by 1.73 times. It's excellent, but the test was done only on 20 kilos, so we need to do more tests to have a very representative test. But that's for future testing. Just a quick vision of presentation of what is the operation proposed. Before the leaching pad, the yellow, leaching pad is the yellow stuff that you see on the left-hand side. Before that, there's two crushing sequences followed by a high pressure grinding roller sequence to reduce the size of the material under 6 millimeters. And then the finer material is placed on an agglomeration drum. The agglomeration will make that the fine material will not create any blockage in the leaching. So and then it goes to the leaching pad, and then you put some, it's a solvent liquor that is put on top. It's sulfuric acid added with bacteria that drip over the pile, and then the liquor that comes at the end goes to solvent extraction and then electrowinning to produce the katads. As you can see, it's very simple operation. That's a Google Earth map of the area. And what you can see on the right-hand side is where you have the mine, where you have the pit, and you can see that it's quite hilly in that area. So we cannot put all the operation there. So we have, the first and secondary crushing there, and then the material is sent on a conveyor. It's about 4 kilometers to a flat area, which is near the main road. We don't see it here, but we will see a bit later, and where we have all the operation and the leaching. That's the map of the south of Namibia, and what you see there, the white line that you see there that make contours is the border between South Africa and Namibia. On the left-hand side, you see that there's 2 zinc mines in operation, pretty large, operated one by Vedanta, and near the right-hand side, you see the concession Haib, and the little black line that goes from the bottom to the top is the main commercial road coming from Cape Town, South Africa, crossing all Namibia. So we have the most important road in Namibia crossing our concession. So we don't have a problem for transportation there. The deposit lies at about 15 kilometers from the Orange River. and that's where we will pump water and pipeline it to the operation. The major power lines are about 85 kilometers of the area, where we will have to discuss with NamPower to see who's paying what to bring the power there. But one of the things that is very important here is that Namibia has 320 days of sun per average in a year. And in that specific area on the Haib deposit, it's probably more around 360 days per year. It's extremely sunny. There's not a lot of water flowing there. So there's not a lot of rain going there. So importantly, at the next, and soon we will start looking at solar power, because that's going to be very important. And probably important enough to lower down our requirements and power from the government, and then we could probably connect to a power line that is crossing the concession and following the main commercial road. So that would reduce the cost substantially, and that would improve the economics again. So where we stand now and where we go is that we will undertake a feasibility study on the project. The first stage is to do infill drilling up to 12,000 meters in the center area to define the grade of the area, and also to estimate and measure the resource for that area. And at the same time, we will increase the grade of the overall deposit, which will have an effect also on the economics. So that's the first step, and that's why also we believe that we will be able to give very good added value to the shareholders, because most of the added value is always coming. A lot of added value is always coming from drilling, and we came to the market with this company without drilling ourselves. Drilling was all done, and there was other stuff to be done first. So that's one of the reasons why we're undervalued compared to our peers. But now, entering into that phase, we will start giving a substantial added value. Then it will be followed by further metallurgical test work and mining engineering design, plus the environmental impact study. That's a program for about 2 years. When I was saying also that there was 5 satellites targeted, that's on slide 21. It's on the center of that map, you see the round shape called Haib, and that's the deposit. That's the main deposit. That's where we have all the resources delineated so far. And when you look at around that, there's Haib East, Haib West, and the others, that they are all satellites to the main body that have been identified by sampling, by geophysical survey, and we drilled a little bit in the end of budgets on Haib West and Haib East, and not very shallow drilling, not too deep. And we tend to see we have the exact same mineralogy than in the main body, and we tend to have the same type of grades. So that's certainly lined up for future work. So what you see in the main body, in drilling in drilling deeper than what we have, that the resource that has been estimated so far, we can certainly double the tonnage. But then going outside and drilling in these specific satellite targets, guess where we can go with the tonnage. We can probably end up with 2, 3, 4 times from where we are now. So it's pretty exciting for the future. But for now, we need to develop the main body a little bit more. So next slide, that's about it. So that's our story, and that's if you need more information, you're welcome to email us or call us. And now it's open up for questions.
Hello. Can anyone hear me still?
Yes.
Great. All right, let's kick things off with a question from Harry Sanders. He says, first question, could you talk about the permitting process in Namibia a little bit further?
Sorry, I didn't hear well. The what process?
The permitting process. Could you talk a little bit more about the permitting?
Okay, that's fine. At the moment, we have an exploration license. We have the exploration license since 2004. And the way it works is the first period, it's 3 years, and after that, it's renewable every 2 years. As long as you do some work and you develop your project, it's like an automatic renewal. You know, they will renew it. It's they're there to support development, so it's not a problem, and you can see it. We have it since 2004, and it has always been renewed. So for us, it's not an issue. And then after, if we want to have a mining lease, which will be the case after the feasibility study, we need to file a feasibility study and an environmental impact study. And normally it takes about 6 months to 10 months to get the license awarded, if you have comply with all the requirements, which will be the case. And so it's pretty easy and clear forward system, and the costs are extremely low. You know, it's not something that costs thousands and thousands of dollars. Apart the cost of the feasibility study and the environmental impact study, the cost of the government are below $10,000.
Next question here, is there a local ownership requirement, as in, for instance, Congo or South Africa?
Yeah, that's a good question. No, and we're not near to see that. There was quite a lot of story, and I think that question is important, and I need to go back in history just to give you a pretty good feel about that. First, I know Namibia extremely well. I'm doing business in Namibia on a regular basis since 1996. I lived there with my family for 3 years early in the 2000s. I have a very large contact base in Namibia and South Africa. Now, also our chairman, who is also a large shareholder in the company, is a Namibian, a retired lawyer. We have about 20% of the shareholding, which is held by Namibian shareholders. So we're really a Namibian company. And so now, to go back in the history, in the mid-90s, the Minister of Mine decided that it was time to make some changes, and the new Mining Act was saying that licenses had to be held by Namibians. So if foreign companies want to come in Namibia, then they do deal with Namibians. And that has lasted like this up to recently. And during the time, early 2000, and then at the end of the 2008, 2009, there was a period where at Parliament there was discussion about creating a new black empowerment bill, like there is one in South Africa, forcing companies to have 25% ownership in Namibia with Namibians, and people on the board, and workforce should be 25% Namibians and stuff like this. And it has been rejected all the time, every time they've tried that. Recently, the President Geingob, when he took office, he said, under my mandate, there will never be a black empowerment law like we see in other countries. We think that it's detrimental for the country. We don't want to, we need to have foreign investors. We need to have foreign currencies. So that's the worst thing we can do for our country. We will help our people different ways. And last year, the Minister of Mines, the new Minister of Mines, mentioned that from now on, the obligation to where the licenses would be owned only by Namibians is over. He was welcoming foreign companies to come and apply for licenses. Everybody is welcome. Of course, they still recommend and suggest that at least 5% of the projects or the companies are held by Namibian, but it's only a recommendation. So that's the minding, the way they are in Namibia. So because of that, I can tell you, you won't see that for at least 10 years. I'm not saying that the story will not come back again, because there's a lot of movements around Namibia in other countries in that sense. But Namibia in general is one of the highest education level for people in Africa. They're well educated, and they understand well that this is not the way that if they go that way, they will create other problems. They will lose quite a lot of investment from the foreign investors, so they don't want that. So that's the situation at the moment. But for us, because we're held largely by Namibians, because we have Namibians on our board, we're already well represented. So we feel comfortable that anyway, if there's something happening in the future, requesting more ownership from Namibia. We're already like this. So we're not nervous about that.
Very good. Next question here. Can you discuss timelines for the steps up to production, such as permitting, the decision, building the actual mine?
Yeah. If we start today, if we have all the financing today, it's going to take 2 years from now to do the feasibility study. Then after the feasibility study, what we suggest is to do a pilot plant on site to produce 1,000 tons of cathodes for at least 1 year of production. And so it's another year. So let's say we do that and we start producing on pilot plant scale in 3 years from now, okay? Then that will run for about a year, and then after that you can upgrade your production to the large scale. So the large scale would happen 5 years from now. The reason why the pilot plant is very important, it's because in the leaching, what we've seen many times in the past, it's a type of technology we cannot fast track. It's not complex, it's very simple, but you can imagine that when you pile rocks, stacks of rock, let's say 20 meter high, 100 meter long, 50 meter large, and you have the sulfuric acid dripping into that, creating a liquor in the bottom. You imagine if there's a blockage in the middle of that stack, you have a huge problem. And we've seen many times in the past where companies were fast tracking and they were ending up with huge problems they were just incapable to resolve. So it's very important for that type of operation to have a pilot plan to make sure that you will fine-tune all the processing operation. And then with this, when it's fine-tuned and it's well organized, then you can fast track to increase the size of the project. So from now to full production, if all the financing was in place, and that includes permitting, it would take 5 years to be in full-scale production at 20 million tons per annum. Okay. The pilot plant also, that period is very important for another thing, is that you can bring major companies, strategic investors, bankers, and all of this. All of these type of people, you can bring them and visit the operation, and then they see it works. So it's convincing. Because it's a project of a scale that at some point in time it will probably be taken over by a large company or the company or the project. There's a good chance for that. So that's why we must add value now for our shareholder and develop the project correctly and attract these strategic partners for the future.
Good stuff. Next question here comes from Rob Rubley. He says, why do you suppose previous operators have given up on the project, and how did Deep South come to acquire this project?
Okay. Rio Tinto was really the first company to have a large, well-organized exploration program. They've drilled 45,000 meters. They've done quite a lot of other work. That was in the early 70s. At the same time, they were also discovering and developing the Russing uranium project in Namibia. And mid-70s, senior management was having to make a decision which deposit they will keep and develop. And Haib is a low-grade deposit, and Russing was a high-grade uranium deposit at the time. So they decided to drop Haib and focus on developing Russing. And what we can say about that today was probably the right decision, because it's still in production today and still making profits. So despite the uranium market, which is low. So it was the right decision. Then after that, there was different companies that went onto the project. One made in the mid-90s, a company from Australia made a feasibility study using mint rock for that. There was a resource estimation and so on, but they were using more classical extraction, going to the grinding, milling, roast leaching, flotation, and then all the big stuff to produce concentrate first and then cathodes. And the problem with that, with the low grade ore, is the price of copper was not high enough to support an operation like this and give a decent return. So, and then at the end of the 90s, the price of copper dropped, and so they just walked away. After that, in 2004, we applied Deep South as a private company. We were a private Namibian company. We applied for the license, and we have been awarded the license. And since then, we slowly developed it, and the price of copper was not exactly favorable for us. Then we had a deal with Teck in 2008, where they were having an option to acquire 70% of the project, and which they did in 2011. And from 2011 to 2015, we've spent $5 million on the project, Deep South and Teck. And in 2016, Teck were starting having some. In 15, they were having financial difficult situations to resolve, and they have cut down their exploration program quite a lot in the world. At the same time, the Ministry of Mines was starting putting pressure to see more development, not only exploration. And the management, senior management of Teck was putting pressure also on their exploration team because they were supposed to acquire more projects, not only one. That's the only operation they were having in Africa, and they were feeling that it was, it was marginal at the time for the type of amount of money they were spending on the continent. So they've put pressure to acquire more project or sell this one. And as the exploration team of Haib of Teck have always really liked the project, they made the proposal that we ended up doing what we did. We acquired their 70% in consideration for shares of Deep South. So they became at the time our largest shareholder, and they're still a very supportive shareholder. And so that's fine. They're there. They're looking at what we're doing, and they are still potentially an acquirer for a company that could acquire the project in the future to develop it further. But at the moment, they were a lot more busy with development of their project in Chile and some in Canada. So that's the story of why it's like this. The other thing also is that the project was in need of a different vision. At some point in time, it's nice to chase tonnage all the time, but it was important also to start looking at what kind of technology we can use to extract the metal and see if we can have a good return. And it was important to see what we were able to do with the high-grade sections. And so that's what we're doing now. And suddenly we see that there's interest from mining companies for the work we're doing. That's it.
Awesome. Another question here. What is Deep South's cash position, and what will the company need to do some financing for the planned drilling? Similarly, I got another question that's very similar about the funding requirement to feasibility study and then to the pilot plan. So perhaps just map out in more detail the funding requirements as we get to each step of the way here.
Yeah. The full feasibility study comes at a cost of $7 million US. The first leg, the first step is to do the infill drilling at a cost. If we do the full 12,000 meters of drilling, it's at a cost of $2.5 million US. Now, we don't need to do all of this in the same time. So our first funding requirement will be minimum 800 to 900,000. We can start the infill drilling immediately, and on the back of good results, and we're confident we will generate good results there, then we can finance the second phase of drilling. Then on good results, we can raise more money to go with the next step, which is metallurgy and so on. So we're pretty confident we can do that in 3 steps over the next 2 years. And pretty soon, very soon, because our cash position at the moment is pretty low. It's around $50,000. And in the coming days, we will look at starting a private placement. There's some discussions with some brokers at the moment in place, and we will announce that very, very soon. And we already have some commitments in place for a private placement that we will start soon. We just need to define the terms correctly, and then we're gonna go. So we're pretty confident that in the next 2 months, we will get the funding in place, and we will start the preparation on land and for the drilling, because we have also contractors, very good contractors, drilling contractors in Namibia. So we don't have a problem with COVID-19 and lockdowns here and there. So.
Good stuff. So Paul Smith was appointed as COO at the end of April. Let's walk through what was some of the expertise that you saw in Paul, and why were you excited for him to join the story in the role of COO, and also love to hear from you.
Okay, Paul is also a director. He was a director in February. Paul has a very serious background. He's when you look at his career, he has worked for small companies, he has worked for big companies, he has a background in metallurgy and also in geology. He has also done an MBA. He has been a stockbroker and investment banker for a part of his career, so he has touched quite a lot of things. And on top of that, he has been instrumental with his team as COO of We Platinum, to the construction, financing and construction of a large $1.5 billion mine, platinum mine in South Africa, which is still in operation profitably today. So he has a huge experience of putting feasibilities together and bringing feasibilities to mine construction. So that's a very important expertise for us, because before that, we were mainly all exploration guys. It's like Viv Stewart-Williams is a very good geologist with 45 years of experience, mainly in covering all Africa. So, but we're still in exploration phases. So Paul had brought a lot of experience on development of project, and that's where we are now. So that's why we're very happy to have him on board. The other thing also, because he has an experience as investment banker and stockbroker, he understands extremely well the challenges of an exploration company, and he understands how we finance projects. So it's an addition to our board and to our management team. So we pretty soon he will be responsible of starting that development phase, which is the feasibility study.
Very good. Excellent. I see another question here from Hugo. He asks, how is the government situation?
It's very stable. When you look at Namibia, if you go on the World Bank website or the IMF website, you will see that Namibia and Botswana are always ranking number 2 and 3 as the best country to invest in Africa. It's extremely stable, and one of the things you should keep in mind is that it's larger than it's nearly the size of France, and there's only 2.5 million inhabitants, so it's very sparsely populated. You have a lot of problems with government where there's dense population. And in that case here, it's not the case. The other thing is that democracy now is controlled mainly by the SWAPO party, which is representing one of the 10 cultural groups in Namibia. But they represent about 50% of the population, and they're well linked with the Hereros. So together, they're probably about 60-something% of the population. So they are the people really controlling the political scene. And since its independence in 1990, it has always been a very quiet country, very easy to deal with. The justice system, you can see that is very independent from the political side, and they tend to keep that. They really want to keep that like this. So it's government is in a very good position, and it's a very good democracy.
Excellent. Question here from Dietmar. He says, how high is the burn rate?
The burn rate at the moment is below $20,000 per month. It's a pretty lean and mean company, but it will certainly go a little bit higher when we will start the drilling and feasibility, but not necessarily to a point where it's going to be unmanageable. We're all large shareholders around here, so it's very important for us to keep the cash tight.
Leslie Watson wants to know, where are the remaining drill cores stored?
On site. We have a core shed on site, and they're well preserved. And that, as this area is extremely dry, you can see that over the past 40 something years, they have not been altered at all. They're like brand new. So it's not a problem. They're there since early 1970s, and we have accumulated some over the years up to today. There's about 20 of these cores that are stored with the Ministry of Mines in Windhoek.
Very good. Obviously, this session today is called Copper is Shining. Time to get in. What are your thoughts on copper, both now and in the future? Why are you so excited about copper?
Well, it's the first thing which is very important is that the production is always reducing every year. It's diminishing all the time. In Chile, they have huge structural problems. Their mines are old, their mines are deep, their mines are lower and lower grades, so their production is going lower and lower. So what will happen in the future if we don't have new projects coming online is we will have difficulty to get copper, and then it means the price will go higher. So, and there was not a lot of major discovery in the past 20 years, and there's still none on the radar so much. You know, there's some, but not enough to bring a balance of to bring enough production to balance out the diminishing production. So it's just that makes it extremely exciting. Now, another thing about copper, as we know, it's the best conductor for power. So we need to conduct power in every tool we use. So there's electrification of transportation that makes that we will use a lot more copper. An electric car is using 4 times more copper than a gasoline car. But now let's talk about trains, let's talk about buses, let's talk about tramways, let's talk about vessels, even airplanes. They're now trying some electric batteries to power some airplanes. So in the future, there will be a huge demand coming from that. And another point is that it's known now that copper is a very good product to eliminate bacteria and viruses. You put bacteria on a surface, on a table or a virus, and you put a little bit of copper over that, or you put that on a surface of copper, and it will be eliminated in less than 2 hours. So I'm not sure what will be the market for the future with this, but we can see that copper will certainly be used in future, materials that will be built to fight against the bacteria and viruses. So there's a huge potential for copper in the future, and it's a pretty simple commodity to transform and to use. So and the last thing is that over the years, I would say over the last 100 years, many people have tried to replace copper by other stuff. Aluminium, it's cheaper and it weighs less and it's better, but it breaks. So it was not working. There's only one conductor which is better than. There's 2 conductors that are better than copper. It's silver and gold. But can you see all the wire in your house in silver or gold? Gee, the house would cost quite a lot. So we're stuck with copper.
There you go. This next one, I'd like to ask you, Paul. How can extraction technologies influence the production potential of a mine?
Yeah, look, I think what Pierre sketched out is very, very important, and we need to really look at that. And I'll put it in context with our project, and that is the majors reviewed the Haib using classical technology, as mentioned by Pierre. So it's crushing, milling, flotation, and then exporting a flotation concentrate huge distances in terms of in Namibia onto port, onto ship, and then exported globally. So the advances in technology that we're applying is really, really exciting in that we are using bioleaching. Now, bioleaching is proven beyond any doubt in both gold extraction and in base metal extraction. Heap leaching is proven without any doubt. High pressure milling is proven without any doubt. And then obviously producing a high value product on site, which is copper cathode or copper sulfite or both. So, and there we also then transporting a very high value product, and then hence the cost per pound of copper is very low. So it's these technologies that have allowed us to take a quantum leap in terms of economic benefit to the project. And that's why, in our opinion, and what we're beginning to show in the research we're doing, is that this will be highly profitable as well. So with the move in technology, we fundamentally moved the goalposts in the viability of the project. So yeah, technology is extremely important. There was a question a bit earlier about what is high grade, and I don't think we've really answered that, but it appears that the weighted average grade that we have so far in the exploration work is 0.3% copper. And when we talk about high grade, we really talk about between 0.5 and 1% copper. And the next phase of exploration drilling is really focusing on the high grade areas. And when we say high grade, it's up to 1%. And the technology that we will be applying is really high grade. You know, it's not the 4% you'll find in some other of the older mining areas on the Zambian copper belt and so on. But then again, they've had to use the old technology in terms of extraction. So yeah, technology has given us a quantum leap in economics.
Very good. Okay, folks, last question for the both of you. We talked about some of the major milestones coming up shortly. I'm curious, what are you each most excited about in the next 12 to 16 months?
The first thing for me, it's drilling in the high-grade area, because for us there was 3 challenges when we took that project over. When we took it back and reorganized with Teck, the first one was, do we have a technology to extract the metal at low capex and low opex and give a good return? If it's the case, we have a project, and we have been gone over that first challenge in showing that bioassisted leaching, which is a robust technology, proven technology, is working very well, and the ore at Haib is highly amenable to that. The second challenge was to prove that we can generate some very robust economics around that technology, which we just done recently with the PEA. And our third challenge was to show, can we improve the grade? And that we're confident and we're pretty excited. Yes, we can do that. And now finally we will start doing it. So that's our third challenge. That's why I'm very excited. And personally, my background of stockbroker and investment banker tells me that on good results, we can give some very nice added value. So that's why I'm very excited about it.
Awesome. What about you, Paul? What are you most excited about?
Yeah, look, I think Piers hit the key points on the head. It's those are the key aspects. But I think to add to that is it's in the context of the capital profile of the project. So if one looks at the capital spend per pound or per ton of copper, we very, very aggressively economic. And if you look at the process technologies utilized in terms of bioleaching, heap leaching, crushing, no milling, no flotation, no smelting, no metal refining, other than obviously the electrowinning process, the capital profile is very low. And I think we have shared the capital profile of the project to date in this presentation. So, and also when one starts talking about operating big operations in these environments, they are relatively low technology and easily operated. I can use examples of pressure leaching on other big operations. Pressure leaching is a very, very complex, very aggressive, and very capital intensive. So we're staying right away from those types of technology. So I think we're bringing some really exciting times to the project.
Excellent. Okay, that brings to a close the Q&A portion of today's summit. I want to thank everyone who submitted their questions. And if for whatever reason you didn't have your question answered or you just thought of a good one right now, feel free to submit it to Deep South. You can see their email there, info@deepsouthresources.com, and they would be happy to answer it. Now I will pass it back to you, Pierre, for the final word.
Thank you, everyone, to have joined us today. We're pretty happy to have all of you, and we hope that we will have you as shareholders pretty soon, because we're just starting a pretty exciting period. So let's join us, and as I said, the copper is shining, so let's get in.